Hi, everyone. Welcome. We're going to start on time. So I'm just going to start sharing my presentation. Okay. Welcome to Marosa's webinar, European VAT Compliance for Fuel Card Services Companies. My name is Veronica, and I'm Marketing Manager at Marosa, and I will be your moderator today. Just before we start the webinar, I would like to show you some of the housekeeping rules. So we are recording this webinar and we will send you the recording and the presentation slides after the webinar. But if you have any questions, please use the chat function and we will address them during the Q&A sessions. If we don't manage to go through all of your questions, don't worry, we'll send you an email with the answers. So your presenter today is going to be Pedro Pestana da Silva. He's a European VAT compliance and tax automation expert. He has over 16 years of experience, including a decade at the Big Four, and he's a founder of Marosa. And Marosa is a tech technology business that helps growing other businesses across Europe, and we provide tech-enabled services, software as a service solutions, and VAT consulting. We handle over 800 clients, and we submit over 30,000 VAT returns per year. At today's webinar, we're going to cover what are fuel card services. So what is the scope of it? VAT rules for fuel card services. We're going to talk about the VEGA case, and we're going to talk about the automation in the fuel card services businesses. But let me hand over to Pedro, who's going to walk you through all of these points I just mentioned.
Thank you very much, Veronica, for the introduction, and welcome everyone to this webinar. I'm going to now share my screen and continue from where Veronica left it, which was our agenda. Basically, as she explained, we will go through each of these 4 items. But before I start, I do want to salute our UPay members. Marosa is part of UPay, an association of fuel suppliers in Europe. And this is relevant for this webinar. It was organized together with them, but also because a lot of the VAT discussions that we will explain today are being held as well at UPay, and it is an association that is very much up to date with the VEGA case and the outcome that is bringing across Europe. So having introduced the VEGA case, let's go into the details of this webinar. First of all, and for the benefit of everyone who's not so up to date with the industry, what are fuel card services? Let's describe it and let's just take a moment to split it in a way that we will use it later. Yes?
Just to remind you, if you want to share your screen and your presentation, just do so.
Apparently, it was not sharing it. I was speaking as if it was. Thank you, Veronica.
No problems. We can see your slides now.
Very good. That's great. So
no worries.
I was just saying, we will start by going through what are fuel card services. So in a fuel card activity, there is a fuel card issuer who provides a card usually to the final client, who then uses that card to load fuel in petrol stations. So there is an initial supplier, who is a petrol station. There is an intermediary, who is the card issuer, and there is the final client, who is the card holder. We do want to have these 3 personas very clear, because that will be used later to understand the VAT treatment. From a VAT perspective, it also makes it more interesting that there is an international reach on these activities, which make it slightly more complex and yet possible to centralize. Another component of the fuel card activity is that it's very much automated. The payment is automated, the recording is automated, and the ultimate tax reporting may also be automated. And that's ultimately what brings us here. We believe fuel card businesses are a good candidate for a full tax function automation using a software like Verify, as we will explain at the end of the presentation. Let's look at the activity a little bit more visually. We have the petrol station, we have the card issuer, and we have, for example, a truck driver who loads fuel across Europe. The car issuer will provide the truck driver with a card, and the fuel will be charged, for example, in Germany, but also in other countries. But what happens if there are other services? When it comes to the fuel card services, um, we see that very often that same card can be used for ancillary services and solutions. Not only fuel, so it can go to tolls, so that you use that card to go through highways and tolls. You could also get car wash services, and all with the same card. Again, this is important from a VAT perspective, as we will explain in a second. Now, we're clear on what is the activity. Now, what is the VAT treatment for this activity? There is a big distinction we need to make, first of all, on whether we treat this activity as a supply of goods by the card issuer or a supply of services. This is very important because there is a Chinese wall between goods and services when it comes to VAT rules. And you do need to take that distinction into account. We will, in these next 3 slides, consider goods as the supply made by the fuel card issuer. Later in the VEGA case, I will explain how services approach would work and what the impact is. If we are to take into account a supply of goods by the card issuer, we need to consider, first of all, that it's a domestic transaction when it comes to the supply of fuel. And we get that question from our clients from time to time. So, for example, I'm an Austrian fuel card business. I have a client who's a Polish company. I provide that card to the Polish company, but then sometimes I need to charge French VAT. Why? Because the petrol station is in France, hence the place of supply of that supply is France, where the goods are located. Another component of the VAT rules for a fuel card activity when it comes to a goods approach is that plus and purchase sale. Although the fuel is charged, is loaded from the petrol station into the tracker, the final client, there is a fiction of a purchase and a sale made by the card issuer. Yeah, so that immediate purchase sale transaction is a characteristic from a VAT perspective, as we will see in a second. And then you have the ancillary services, which we will also look at in another slide, but also need a dedicated look from a VAT point of view. Now, let's look again at the activity and stakeholders, but from a VAT perspective. We have the petrol station, we have the card issuer, and we have the card holder or final client. The card holder will load fuel from the petrol station, but at that moment on, say we do it in Germany, there is a flash purchase and a flash sale. The card issuer's VAT number in the country where the transaction took place is the VAT number stated on the invoice, and that VAT incurred on the purchase and collected on the sale is the VAT amount that will be reported, in this case, in the German VAT return. If then that same truck moves into France, we have the same transaction, but that flash purchase and sale happens through the French VAT number of the card issuer. And what happens if there are other services involved? For example, car wash, or for example, tolls. As I said earlier, the distinction between goods and services from a VAT perspective is big and relevant. And when it comes to services, it requires a dedicated and individual look at each kind of service. For example, tolls are a service connected to immovable property, hence the place of supply is where the movable property is located. Car wash normally would be a service that follows a general rule, which is a B2B rule that is located where the customer is established. The place of supply will then define whether you need to charge VAT or not, and that will then define your charges and your financial, your compliance obligations. So very important to have an individual look at each of those ancillary services that you look at. Let's summarize it once again, and let's look at the compliance obligations. When it comes to a fuel card issuer who is providing this activity cross-border, who is assuming following the goods approach pre-VEGA case, they will normally need to register in each of the countries where they are having this activity. So each of the countries where their final client loads fuel through a petrol station would require a VAT registration. In that moment on, there will be normally a domestic purchase of goods in the country where the fuel was charged, and a domestic sale of goods also in that same country to the final card holder. Now, we looked at from our experience in fuel card businesses that reverse charge implications are not being looked at enough. The reverse charge rules are foreseen in Article 194 of the directive, and I guess the main characteristic when it comes to VAT is that each country does his own interpretation of that article. In other words, you will need to charge VAT or not, depending on what the reverse charge rules say. And there are three possible scenarios. You have a scenario where your card holder, final client, is established in the country where the petrol station is. A scenario where your card holder is not established but VAT registered in that country, and a scenario where that card holder is not established nor VAT registered. Depending on which scenario you are in and which country you are in for each of those scenarios, you will need to charge VAT or not. At the end of this webinar, we will share with you a table with 3 countries only. And for each of those 3 countries, the 3 scenarios that apply. But I believe that table will be useful for you because you will at least see what questions need to be asked when you're looking at reverse charge scenarios and each of those in each of those countries. Right. So those are compliance obligations. We looked at already VAT rules under the goods approach. We'll now look at the VEGA case, but I'll give a couple of seconds for anyone to write the questions in the chat as Veronica explained earlier, so that we can go through later. I think we're good on time.
Mm-hmm. Yeah, we're very good on time. We do have one question, so I'm just going to read it to you. So the question popped out during you were explaining the VAT treatments. So the question is, for fuel cards, we often see that apart from car wash, often non-fuel items can be purchased with a fuel card, such as lubricants, maps, car accessories, etc. So is that taking into account while assessing the VAT treatment?
Yeah, that goes back to my remark here on this information icon. You need to look at each type of supply individually. You mentioned a few items, such as lubricants, maps, or accessories. To me, those are goods. Hence, they should be treated as part of your taxable base, made up by the fuel as well. So if you charge 100 euros of fuel plus a map that costs 10 euros in your VAT return as a purchase and a sale, you will have 110 euros of purchase of goods and sales of goods. You need to look at the VAT rate. It is possible that the item bought in the separately from the fuel has a different VAT rate from the fuel. So that requires an analysis too. Um, a more complex item is the car wash, where you actually don't charge VAT and would normally not fall into the VAT return. But long story short, it requires a detailed analysis. We're happy to help on that. You provide a list of all the possible items, and we would normally look at what the rules would be in each of the countries. One aspect I didn't mention earlier is the use and enjoyment rule. To make things a little bit more complicated, where you are dealing with non-EU companies and the supply is treated as a B2B supply, use and enjoyment rules may apply. Again, they need a dedicated individual regard. Um, my only remark for this webinar is that it needs to be done. We don't have time to go through what is the explanation of use and enjoyment rules, but you should be aware of those existing so that you look at them when the right time comes. Is there any other question, Veronica?
Perfect. That was the only one, but I would like to
Okay.
encourage everyone to submit their questions in the chat. We're going to have another session later on. But if you have any questions that are going to come up after the webinar, we're going to leave our contact details and we would be happy to help you on your individual and specific case. Pedro,
Okay.
you can continue.
Great. Thank you so much, Veronica. So in the last slides, we explained what the approach would be in a goods scenario for the card issuer. But in 2019, there was a very relevant case called the VEGA case that since then has created a lot of ambiguity and different interpretations in the VAT considerations of this fuel card activity. Let's see what that VEGA case said. One just small remark is not only the VEGA case. Before that, in 2003, there was the Autolist Holland case, which is a bit of the preliminary interpretation of the VEGA case. Again, at the end of the webinar, we will share materials with you. We will share some interesting reading about these cases, which hopefully help to give you background on this entire topic. But let's look at the activity. What did the VEGA case say? What did the VEGA case said about the fuel card activity? Basically, on the grounds of the card issuer not having a right of disposal of the fuel. So on the grounds of the card issuer not really controlling whether fuel is charged or not, the ECJ considered the card issuer as not owner of the goods, as not taking ownership of such goods, hence not making a flash purchase and a flash sale of goods. Instead, it considered a service, the component of the intermediation made by the card issuer. And as I said earlier, goods and services have a very different treatment in VAT, and the implications are very relevant, particularly because the service might be considered a financial service. If that happens, then there is a right to deduct VAT that is challenged, which means you might end up not being able to deduct VAT and that VAT amount, hence 20% on your incurred VAT on all or some of your purchases becoming a cost. We do not have time in this 30-minute call or webinar to go through the deep details of the VEGA case. Instead, what I try to do for this webinar is to explain the three possible scenarios so that you keep them in mind, and as and when new interpretations come up, and there is a lot of debate around these interpretations, you have these three scenarios on top of your head and you were able to interpret those changes. What are these three scenarios? The first one is the one we explained at the beginning, which is a goods approach. There is a flash purchase and a flash sale of goods. Yeah. Normally, you incur VAT in the country where the petrol station is, and you may or may not charge VAT depending on the local reverse charge rules. The second one is a services approach, and this is where it gets different or very different. In a services approach, the supply of goods is made from the petrol station to the driver, to the final card holder. And the card issuer is providing a financial service, is providing credit to the driver. If that is the approach, and the services are considered exempt without right to deduct, that means the VAT incurred by the card issuer will not be deductible. So the cost implications are very significant. In a last scenario is where, yes, this is considered a service. There is a supply of goods from the petrol station to the card holder, but that service is taxable. It's either a service from the car issuer to the petrol station, more likely, or a service to the final card holder, depending on the commercial agreement. But long story short, there is a B2B taxable service, which, if it happens cross-border, you normally do not have to charge VAT. So these three scenarios, goods, services, VAT exempt, or services fully taxable, are the three scenarios we need to have on top of our head whenever we're reading a new interpretation of the VEGA case. So to summarize, if a financial services, there is no right to deduct. If it's a B2B service cross-border, you normally do not have a need to register abroad, so there is a compliance impact in here. But there are discussions at VAT expert group, at VAT committee, at European Commission level, and at country level as well, on what the interpretation should be, and with very important implications on the outcome. Our position is, well, most of our clients, and we're filing over 800 returns for fuel card services in Europe. Most of our clients are taking the goods approach, flash purchase, flash sale, and hence they have multiple VAT registrations. The opportunity here for those with multiple VAT registrations is that technology is able to automate your reporting function, reducing efforts, reducing cost. When it comes to technology, the way we see it is you are able to automatically track the transactions via the card. You normally do not make manual adjustments. Your team in the fuel card issuer company, your fuel card company, is daily connected to software and to that automated transaction and activity. Well, that makes a perfect match for an automated reporting where you would normally connect your accounting software with Verify, our reporting software. The data will be pulled automatically from your software. The VAT returns are automatically mapped and generated at that same moment. So day 4 of the month, your data has been extracted because you closed the month, the earlier month. The data has been extracted, the returns are ready. There is a workflow that is launched. You approve the returns, and via API or RPA technology, the returns are submitted automatically. On top of that, should you need help with local requirements, tax inspections in a local country, Marosa has a team of 65 tax experts who provide that assistance at local level. We have a very international team. We cover almost all countries, and these type of queries are our daily work. That's all from me. It's 11:24, so I think perfect for the timing because we left 5 minutes for questions.
Yeah.
We will end up with 3 resources. I don't know, Veronica, if you want to introduce them or you want me to do so,
Maybe we
please.
can go back to Q&A session, and then after that we can introduce the free resources and
Okay.
additional things. Yeah, so we do have one question. It's regarding the VEGA case. The interpretation might, of course, have massive impact on fuel card businesses. But from your experience, are you aware of any other industry examples where the flash purchase and sale is being used correctly?
Yeah. Well, to me, there is one industry that is sister to the fuel card industry, which is the electrical vehicle charging industry. It's very much the same, except that instead of a card, I had a card here with me as an example, you use an app. And instead of fuel, you load electricity. But it's very cross-border, very often, and probably that's a difference with fuel card companies. The final card holder or app holder is a private individual, but in the end, the interpretations that are being done around the VEGA case uh, follow very much in the electric vehicle charging interpretation, and the that interpretation is inclining towards the goods approach. Electricity is considered a good for VAT purposes, by the way.
Thank you. There's no other questions. However, maybe if you can spend a minute explaining the VAT recovery cases. I think a lot of attendees here are also interested in understanding of that compliance services.
Yes, yes. Thank you so much, Veronica, for bringing that topic because we have a couple of minutes left. Let me just bring in the activity again. We explained the VAT treatment focusing on the card issuer's obligations. So the card issuer has to register in multiple countries, needs to look at reverse charge implications, has compliance obligations, can automate it, etc. But what about the actual truck driver and final client? So I'm a police, for example, a truck driver. I hold a card issued by a fuel card company, and I go and load fuel across Europe. Well, uh, when I load that fuel, if I am not registered or established in the country and reverse charge does not apply, I will incur VAT. That means that if I'm a Polish company and I load fuel in Germany, I will incur VAT at 19%, in France 20%, in Spain 21%. So in the end of the year, I probably have a significant amount of VAT incurred cross-border. How do I recover that VAT? If you are an EU company, first of all, it's a lot easier than if you are a non-EU company, because for EU businesses, recovering VAT incurred in another EU country can be done through a single platform, a one-stop shop solution called the EU Refund Directive, the 2008-09 EC VAT Directive, which allows you to, in the case at hand that I was just giving, a Polish company incurring VAT abroad, they will go into the Polish tax authority's website, fill in a form with all the VAT incurred abroad, uh, submitting that form electronically, and that form being automatically forwarded by the Polish tax authorities to each of the countries, and those countries replying by automatically refunding the VAT into the bank account of the of the of the Polish company, or with questions. So that is the simple approach. If you are a non-EU company, say for example a Serbian business or a UK company, you need to submit individual applications in each of the countries where fuel has been loaded on your truck and where VAT has been incurred on that purchase. Yeah. Individual applications follow what is called the 13th VAT directive. They often require a fiscal representative, and they often require mutual recognition of VAT treatment. In other words, reciprocity. So if the police, so if a if a French company cannot recover VAT in Morocco, for example, then a Moroccan company cannot recover VAT in France. That's the reciprocity requirement. And it's typically a blocker when it comes to non-EU businesses recovering VAT abroad when they do not have a VAT registration. That's my 2 pennies on VAT recovery. If I can add something, Marosa provides that service automatically and with a component of tax support. So if you have that need of a tax inspection in a country, which is often when things get more complex, we do it centrally and we handle all those queries until you get the VAT refund, typically on a success, no refund, no fee basis. That's all. Veronica, did any question come up in the meantime? I see it didn't, no?
Thank you, Pedro. No, we didn't. But if you don't mind, we can go to our last slide. And I hope everyone learned something from this. So as a reminder, we're going to send you a recording. We're going to send you slides. But I also want to tell you that we're going to include a slide with some useful and free resources on a VAT news, VAT trends, multiple checkers, etc. In any case, we're going to leave also a contact number. So if you need any help with your VAT compliance, we're happy to answer any of your specific questions. And I would like to wish you a really good day.
Thank you everyone so much for attending, and let's stay in touch. We're here for any questions or help you might need. Bye-bye.
Perfect. Thank you.
Thank you, Veronica, so
Bye,
much.
everyone. Thank